Hello, YouTube viewers. This is Martin Day Trades, and it's kind of late. It is 9:11 p.m. Mountain Standard Time, September 2nd. I'm going to go over my day trade NAS100 review. I essentially had a break-even day, guys. I overtraded a lot today, little small risks on my trades, but I kind of just want to go over what happened. So let's go ahead and check out the charts. And what we can see here on a 5-minute chart is we had this move here. I was expecting a pullback and it never happened. So what I could have done was, yeah, no, I don't know really how it got close to the 38%, but it never tapped it. Continuation day, you can see right here, 8:30, there was this expansion upwards, Eastern Standard Time. By the time 9:30 came around this time right here, 9:30, had the drop. This was the buy for this move up, but some people bought this as it cleared the Asian session low, which I didn't have correctly drawn, which probably messed me up a little bit. There we go. So I would have seen that it would have tapped the Asian session low. Could have entered right here, guys. Caught this move up, which was, we'll just say around here somewhere was the entry. Oh, wrong tool. Um, say 245 was the entry. 218. No, we'll say 220. 220. Like we had a good entry. Let's say right at the Asian session low. 232. 50 pip stop loss, which it never tapped. We could have used a 25 pip stop loss on this day. I'm starting to notice that as soon as it gets to certain levels, you could technically use a 25 pip stop loss, which would help out the risk to reward ratio tremendously. But we'll keep it at 50. And even if we scaled out right at this expansion as it hit this order block, this is a 1 to almost 3 risk to reward. Yeah, technically like a 1 to 3 already. That move right there. So this is a 5-minute candle. So 5, 10 minutes. In 10 minutes, one could have already made 3%. You know, risking 1% made 3,000 in 10 minutes. Now, if they held this trade a little longer to these highs right here, yeah, 3 to yeah, around a 3 to 3.1 to 3.25 risk to reward. And let's say this person held this trade for a while longer and got to these highs, 400, let's say 50 level. Did it ever tap 450? It did to the pip, but let's say we went down a couple pips. In this range we sold, we'll say 432. This could have been a ratio. Oh, perfect. 1 to 4 right here, risking 50 pips. And as price got um, into 1% profit, right? Let's say we're risking 1 for 1. Reward. We can see here that as soon as price got to TP1, which is right here at this price, we could have easily just gone like this, moved it to break even, and then let it trade for the rest of the day, and have maybe scaled out up here, waited for the pullback. Could have had a re-entry, guys. There's this thing, such thing as a re-entry. So here's the minute chart. We can see here that there's this expansion from this low to this high, which we can use then a Fibonacci retracement tool from this low to this high. We'll bring it up, and I'll just use these tools from this low to this high of right here. And we can see that there's this, it's right here, so we can have a pullback and see where it can go into, and we see that it falls right into the 79% fib level. And if you could just take that, trade What else did it line up with? As soon as it got to the 79%, where's the 12 a.m. open? Right at the 12 a.m. open, people were buying. So this could have been a re-entry, have scaled out, made 3%, you know, took 2% off up here, let the rest trade, and then had another trade that someone entered in right here for the long, risking, right between the 70 and 79% right there, risking 50 pips once again for the move higher, and then scaling both trades out right at this level, which turns out to be 1 to 3. So 2% off this trade, let the rest ride. About 2% plus 3%, little over 5% if this was the trade that happened. Now we can see here that once it got into this area, it was coming into an order block. Let's go to the 30-minute. This was a what am I measuring there? Daily? No, 4 hour maybe. I didn't mark the box. Yeah, this is a 4 hour. I needed a market 4 hour bearish order block, right? Okay, so we can see that it came up into this range, and we can even go to the hour to see if we can get an even better entry. And we can see here that it went up, took fake out of this order block, right? And then had its descent downwards. Now I just want to see if there's anything that we can see that shows that it would have. No, it's gonna be the hour. Okay, well we can see that right there. That's fine. No, 4 hours. Okay, so we can see as soon as price got into this range, we could have been targeting this level right here, and it looks like I forgot that there was this. I need to delete that. I needed to pull this down, but I already had that. I was measuring this one to this one, and you can see that there's this fib. Okay, this fib right here, too many fibs. I think that threw me off. So there's 79% fib retracement. One could have entered a trade right in the middle of this order block as price was coming up, squeezing up higher above this 79% for the short. And that's where I had entered one of my trades, but I exited it too fast. 50 pip stop loss right there, which would have survived that move if we got in right at the 50% of this order block, which actually would be like right there. So this would have made it 50 pip stop loss, or we could have said at, towards the high. Where's the big figure level? Say 400. We'll measure it and say like, okay, well, a little bit above 400, which is 412. This isn't a bad trade. 50 pip stop loss, and then this then dripped for the rest of the day, going for that previous day low, which would have been a 1 to 7.5. We'll say we're all out around this level, 1250. We're out at 1250. This was the trade. That's a really nice setup right here, guys. This would have been a nice 7% day. I'm waiting to catch a 7%, anything more than like a 3 or 4% day, guys, just to rack up on the percentages. But yeah, that's today's my day trade. I was essentially break even, guys. Made $58. So a lot of risky trades today. I was risking 0.05 lots, which is nothing. And I ended up finishing the week, actually, guys, 5% in profit, which is amazing. I think in the last 8 weeks, I am up actually 11.8%, 11.8%. So my brother, what I did was I bought a bunch of fake cash, guys. This is me trying to manifest, because on a winning week, there's nothing to really reward myself having a good week. And, a bad week obviously is having less equity in my trading account. But I printed out fake money, and this is 11.8% in hundreds. One day, I'm going to make this happen, just doing the same thing that I'm doing currently, but in a funded account. The next time I take a funded challenge for a 100K account is going to be in January. So that means I still have all of September, all of October, all of November, and all of December to really refine my over trading. And I'm getting better at not over leveraging, which means blowing accounts. So the thing that I'm doing now is just minimizing how much I'm giving back to the market by just taking one trade a day and having the patience to understand that, just add up the daily point percentages, and over time, over the long term, with great discipline and patience and not being greedy or fearful, one can pull profits out of the market. Uh, so go ahead, guys, like, comment, subscribe. Um, Tell me what pair you guys trade, or indice, or metal, commodity, or whatever it is that you guys are trading, and tell me what confluences and setups you guys use so that maybe I can just tap in and see what other traders are looking at. So guys, this is Martin Day Trades. This is my September 2nd, 2022 day trade NAS100 review. Don't forget, the world is yours as long as you stay consistent and disciplined. Success will come to you. Have a great day.